Welcome to Channel Edge, the podcast where channel leaders share success strategies, best practices, and emerging trends. Brought to you by 360 Insights, the channel success platform.
Welcome, everyone, to another episode of Channel Edge, 360 Insights, view into everything channel. I'm your host, Stephen Kelm. So I want to thank everyone for joining us today. And I'm going to jump right into it. And we're going to talk about capital today. We're going to talk about money. And for once, instead of just talking about how do partners make money with what they sell and how do you enable from that perspective, we're going to talk about capital and what do they really need out there to align their sales, marketing, and their products so that they can drive revenue for you and for themselves. So to talk financing the channel, we're joined by Kiley Kunkler, vendor organization lead at Wells Fargo, to talk capital, to talk financing, to talk about how does Wells Fargo, which is where Kiley works, help drive revenue sales for partners and help build relationships. So welcome.
Thank you. Thanks so much for having me. I'm excited to chat with you.
So a couple of things. Wells Fargo, very interesting. Maybe you can tell us a little bit about Wells Fargo's involvement in the channel. I cover a lot of events and go to many, many events. And I can't say that I see a lot of banks at channel events. So tell me a little bit about that. Tell our audience a little bit about that.
It definitely throws people off, and they usually ask me about mortgage rates first. So I will tell you, I have no idea where they are right now. But Wells Fargo has a division called Channel Finance, and it's a global team that's fully dedicated to financing the channel and the unique needs of the channel. And we found that it was really important to have this full dedication because channel partners need a really different type of financing, I think, than your everyday business. The channel is its own monster. And if you're listening to this, you know that. So what we do is we combine our industry focus, that industry expertise, with all of the broader lending capabilities of the bank to offer a very unique product set to vendors, distributors, and resellers. And just to set the tone, I'm using the term resellers that encompasses VARs, MSPs, CSPs, CSSPs, and all of the other types of partners that vendors work with in the channel.
Okay. Well, let's talk a little bit about the market. Now, we can put the interest rates aside, but what's driving the need for so much capital for partners, resellers, that whole broad group, right, today?
So let's talk about working capital, which is essentially the money used by a business to buy the things that they need or the people that they need to provide the products and services and operate on a day-to-day basis. So that's working capital. And when you apply that specifically to a partner's business, access to working capital means at a minimum, they're not stressing about how to access large enough lines to take on larger orders or bridge cash flow gaps to fund their business. So to answer your question specifically, what's driving the need? We're going to talk about two things here. The first one is normally in regular business, what's driving the need? And then we're going to get into some fun things talking about the supply chain constraints. So working capital is really simple. It's basically growth. Businesses want to grow. If you're working with partners that don't want to grow, you have a different kind of a problem, right? But resellers need working capital to grow. And the interesting thing about working capital is the more your business grows, the more you need it. The purchases are always ahead of the collections. So if you're growing and you have more sales, that means you need more stuff or more people to provide that. And you have to bridge the gap. You have to buy the stuff before you collect the money. So your working capital is growing. And resellers that I know and that we work with at Wells Fargo, they're always looking for attractive growth plays, bidding on large government contracts, or even potentially acquisitions of other technologies to grow their product suite. And many times this can demand access to working capital that's beyond their current capacity. So for example, a reseller may have $1 million open account line with a vendor or distributor, but they want to bid on a $5 million government contract. How are they going to fund that? Where are they going to come up with that $4 million bridge? That's where having a financing partner in the middle who has access to all of these other banking tools can really help. So you want to be sure you have a partner who understands the channel and that really specific type of scenario. So that's normal working capital need, growth, right? Talk about what's happening in the market today that's totally unprecedented. The immediate need is the cushioning around the supply chain challenges. The disruption going on paired with the boom in demand for tech, right, is an increased need for capital. And the middleman, that reseller, that partner, is the one shouldering that working capital burden right now. So we were just at a conference in Laguna, California, Stephen, and we saw the tankers or the freight boats sitting out there. Several of them.
Did you take pictures? I took pictures as I was flying over.
Yeah. So we see it, like this is happening real time here. But what that's also doing is potentially creating a strain for vendors. So if vendors are going to step up and allow the extended terms that the resellers need to get a hold of those goods, potentially 90 days or more, and stretching their credit facilities, that's exposing them to a lot of partner risk. And vendors can only take so much risk with resellers to help support those working capital needs. So it's huge. Being a bank, I have a lot of other tools in my tool belt that I can use to mitigate a lot of that risk and provide partners with the access to larger credit facilities and longer terms that they need. A partner has to be able to place an order now and know that they're going to be good to get it in 3 months. So that order is going to be outstanding, open on a credit facility for potentially 90 days. And what can happen is it eats up all their credit capacity. So if there's $1 million order pending out there, how are you going to do other business to keep going and to keep running and to keep growing? And if you think about the enormous growth that's come over the market in the past 18 months, some of the largest vendors that we work with, I mean, the sheer volume of exposure that they're under in context of the supply chain issues too, and the backlogs, I mean, it's really extraordinary what's going on right now. We've not, of course, ever seen anything like this before. And I don't think most large tech organizations, you have this mix of different types of credit quality partners, are really built for managing this kind of risk. That's not what they're trained for.
Well, obviously, it's been accelerating for the last 18 months. What's going on how does Wells Fargo look at that? Do you believe that's going to continue, and those challenges for the vendor and the partner are going to continue to accelerate, or are they?
You nailed it. They've been accelerating, right, at a really intense rate over the past several months, and I don't know that it's going to continue accelerating at that intensity. And of course, I don't have the crystal ball that's going to tell us what the world's going to look like. But could it accelerate forever? I don't think so. I mean, there's a theoretical breaking point here where if you can't make a good or a service, or you can't get it because it's not being shipped, at some point you look for alternative solutions. We're going to adapt to what that is. And we're seeing that a little bit. Like if anybody's tried to buy a new car right now, you pretty much can. And it's estimated that the car industry is going to lose $200 billion in sales with a B over the course of a year because of a chip shortage. But people are still getting where they need to get, right? They've adapted, they've figured it out. So I think we have to acknowledge that the need's really ramped and intense right now. The need for capital in a business is never going to go away. That's how you run your business. But I just don't know how permanent the acceleration is going to be.
Sure. So you talked a little bit about what was in your toolkit. I think one of the things that we wanted to go through was, what is that toolkit? Or even more simply, for all the vendors that are listening, what are your takeaways on this, right? In a short podcast, obviously we can't go through the whole financial situation in the world, but surely, as you said, there's things in your toolkit that vendors can walk away with feeling maybe they're a little bit more armed or a direction to go in.
Yeah. So I think it's really important that vendors are understanding and sensitive to the fact that resellers are the one burdened with the working capital constraints the most in this situation. And with a financing partner, you can help alleviate a lot of that for them. So let's get tactical for a second on how this actually works, the right financing partner. So it's really a three-way partnership between vendor, Wells Fargo, and the reseller. Wells Fargo comes in and uses all of our tools to try and get that reseller a much larger credit line than what they're getting already. So then anytime that reseller purchases your vendor product, because this is a vendor sponsored financing, they can put it on their Wells Fargo facility. And that gives them access to that larger credit line and extended terms, say 90 days, meaning they don't have to come up with the cash and worry about the working capital. How are they going to pay for this? Hopefully until after they've been paid by the end user. So we're bridging their working capital gap. On the back end with the vendor, we're going to pay them in 30 days. So the vendor gets their money up front. So it's a DSO play. It's a cash flow play. You know when your money's coming in. And Wells Fargo takes all of that reseller risk. So can you imagine, like sales guys, put yourself in the shoes. Credit's no longer an issue. Terms are no longer an issue. Resellers bringing a big deal in an end of quarter, but it's way outside their credit capacity. No longer an issue, right? But the big benefit here is the financial benefits to that partner. So you coming in and saying, hey, I get it. There's crazy things happening in the market right now. We don't know when this is going to start to normalize. We're offering you this financing program to really support your business and help you grow. And again, the working capital is literally the lifeblood of the business. It is the day-to-day. And if you are giving them the lifeblood of their business, you become really sticky and important. And so the CFO, the CEO, the president of this reseller is going, wow, this is really impactful for my business. When I buy this vendor's product, I'm seeing tremendous growth rates. I'm going to have my team put this vendor line in my bids, or I'm going to use this in my really big bid because I can put it on my Wells Fargo facility and I'm not constrained by credit or cash. Then their sales grow and your sales grow. Win-win.
So what does it look like? When vendors come to you and want to work with you and they want to reach out and they want to help partners in this, what does it look like from a product, from a sales, from a marketing, from an operational perspective? We're getting very executional on here, right? But what does that actually look like?
Yeah. So product offering, it's a financing benefit as part of your channel program package, helping them put their purchases on a Wells Fargo facility to enhance their working capital. Sales, this is a market differentiator. If your competitors are not offering this and you are offering this, and it's hugely impactful to the reseller's business, they're going to turn to you. Marketing, we believe in you and we want to give you access to these financing tools because we understand that your business wants to grow and how hard it is for you right now. We're investing in you so you can grow your business. We want to be your partner, reseller. So then again, operationally, I just think it comes down to ease of doing business. Take out credit and terms. Get rid of them as a barrier to deals. You're out in the market, you want to get some things done. The last thing you want to do is have to turn around and go have all the conversations with finance and with credit. How can you extend the line? How do you get them the terms? What can you do to pull it in? We've just taken that off the table and made it easier.
So how far off the table, right? I mean, it's a business, right? You run a business, the vendor runs a business, the partner runs a business, right? You can't just give money away, right? There has to be a process to go through this, right? It needs to be good for everyone. You don't want someone to go out of business, right? You want to make sure that everybody in the end, you, the vendor, and the partner are making money. So how does it, where you're trying to make it simple, has it gotten easier to understand what deals make sense, what deals don't? How is that working out?
So when a bank comes in, there are certain financial metrics that we look for, and we're not going to do a deal with a company that we think is going to go out of business in a week or a year or whatever it is.
Sure, I think that's probably the obvious case, right?
And I guess I should also back up and say, when we put these credit facilities in place, therefore, it's not one-off. They're regular, everyday purchases that the reseller can continually use. So we give them the credit facility that they can put their vendor-sponsored products on. So we're looking for resellers that qualify, basically, right? There's certain metrics that we have to look for.
You were talking, we want to make cash flow available for partners for them to solve their businesses, but you still need to make sure, I would assume, right, that, and the vendor as well too, and the distributor, everybody, that, the money goes out, the money comes back, right?
Yes. So something that's really interesting, making sure that they have access to cash. Our global credit facilities over the past, 12 months or so are probably up 25% or so. We've flexed that much. And again, that comes back to understanding that you want the financing partner to have knowledge of the channel with the ability to flex. So that's billions of dollars in working capital that are out in the channel right now, just to accommodate this increased demand and increased supply constraint.
So Wells Fargo obviously must see this as a big opportunity. It makes total sense. If Wells is willing to do this, then they've dug in and they've seen that there's a great opportunity. And it must be based, okay, this is me, I'm not a finance person, on success. There has to have been success to do this, right? There's some risk involved always, research to make a play, but there's got to be some success, or a lot of success. So maybe we can talk a little bit about that. What are you seeing that has been successful? What makes this work? What makes a program work? And then we can also talk about what makes a program fail, because it's perfect.
Yes. So the best example of success that I can talk about is Worldwide Technologies, which I would hope anyone listening knows. Worldwide Technologies. So we've been financing them since maybe 2007. Yeah. We've been able to scale tremendously with them to help them become the successful, massive reseller partner that they are today. So in the tech industry, things happen really, really fast. So having a partner like Wells Fargo that understands their model and where they wanted to go allowed us to scale the financing so we could accommodate their growth. And that also involved understanding the key vendors that they were working with and how they interacted with them, and getting the vendors on board to support this. So when the partnership works well like this, it's tremendous. And again, I use Worldwide to illustrate the importance of scaling with really fast-paced growth. And I don't think that even just a regular banking line would have been able to do that. You have to have the expertise of the channel behind you to understand the risk associated with growth like that and be okay with it.
To fail. Now, I'm sure, and I don't need to know, I'm not asking for names. What I'm really asking is talk about, what makes it successful and then what makes it a problem that has failed, and sort of lessons learned thing.
Yeah, so they're basically inverses of each other. The most successful programs, as with anything, are the easiest to use. The more we see vendors starting to control them or limiting them, the harder that it gets. So that means if you limit them to a specific SKU or product group or only a select small group of resellers, we don't really see any success with those types of programs, especially if they're going through distribution. It just creates too many touch points. It's not as easy to market. It's just not applicable to the broader set of resellers. So limiting it limits your success is basically the lesson learned.
Well, okay, that's an interesting point to make for a lot of vendors out there, because historically, and I used to be a partner, I've been doing this a long time, you would get certain products that were being pushed. And if you were in a certain tier, you had something that was available to. So historically, right, wrong, or indifferent from the vendor community, there was a lot of, hey, if you're in this tier or this category, you can get this. Or, oh, we've got this product line that we really need to move, right? So here's something. And what you're saying is, look, that's great from maybe some of the programs that you run, but from a finance perspective, broader and simpler is better.
Yeah. And I mean, if you think about it, at the core of this program, it's a sales growth tool. We're here to help the vendor grow sales with resellers by supporting their business. So if you want to limit it, let me give it to this smaller SMB type resellers to help them grow more. Well, that's going to make your big guys pretty angry, isn't it? Or they're going to say, why am I not getting access to this tool? I want to support my working capital and to grow as well. So it just makes the most sense. And we've seen the most success with the programs that are broad-based.
Okay. All right. Well, thank you very much for joining us, Kiley. Any last words for vendors out there? Anything you'd like to close with? Maybe what does the future look like for Wells Fargo in the channel? That would be a great one. What does the future look like for you?
Future predictions. I wish I knew. Look, I think it's safe to say that the need for capital is not going anywhere. So things are probably going to look different on the back end, but working capital is not going away, right? Businesses are always going to want to grow. So Wells Fargo, we are always looking at other ways that we can continue to support our reseller partners by working with vendors. And vendors have the opportunity to really step up here and provide a really significant value to their partners.
Okay. Once again, thank you for joining us, Kiley, and talking about finance. It is, I totally agree. It's incredibly important. Having been a partner, I knew how important finances were from start to finish. What's the best way for anybody in our audience to get connected with you?
You can email me directly. It's kiley.kunkler@wellsfargo.com or come find me on LinkedIn.
Okay, we got it. All right, once again, thank you for joining us. Listeners, thank you for joining us and taking your valuable time today. If you have any ideas for future shows, comments, if you'd like to connect with us, please feel free to email us at channeledge@360insights.com. Also, if you enjoyed the show, please do share with your colleagues and remember to subscribe using your favorite podcast platforms, iTunes, Stitcher Radio, Google, wherever you get your great content. Once again, Kiley, thank you for joining us. Listeners, thanks for listening and have a great day.
Thanks, Steve.
Thanks for listening to Channel Edge, brought to you by 360 Insights, the channel success platform. Subscribe now on iTunes, Stitcher Radio, and Google Play, and you'll always be the first to access new episodes where channel leaders share success strategies, best practices, and emerging trends. For bookings, feedback, questions, or comments, feel free to email us at channeledge@360insights.com.